Okay, well, hello everybody. This is Dr. Sam. We're going to talk a little bit about activity-based costing today. And ABC is basically a more detailed way of figuring out costing compared to what we were doing in the last unit. So hopefully everybody can see my Excel screen. And in this Excel screen, you will see at the top of the page, traditional costing methods have a tendency to use peanut butter costing. You heard me talk about that before, where things are kind of like evened out, where one department would subsidize the cost for another department. Okay? Activity-based costing, which is what ABC stands for. Let me actually write that down here. So activity-based costing, also known as ABC. So activity-based costing ignores that peanut butter costing. It kind of like eliminates it from the picture. It gives everyone a more accurate assessment, or every department a more accurate assessment of what the cost for that department actually is. So under normal costing, very, very traditional, as we showed in the last unit, you could use direct labor hours to help you figure out your overhead rate. Maybe you use your direct labor costs, maybe you use your machine hours. But what if those aren't appropriate? There's so many businesses out there for decades. Maybe the appropriate usage should be like number of filing hours that an employee is involved with, yet they're just using just basic direct labor hours. So maybe there's a better way to come up with, a rate. And you know what? Maybe we should be using multiple rates. Maybe there's some direct labor hours involved. Maybe there's some machine hours involved. Maybe there's some square footage involved. So if you figure out your rate based on activity, then you may have a better feel for the overhead. So if you look at this part right here, how to calculate an overhead rate, you guys did this for me on the last exam, and we talked about it in the last video. You take your budgeted overhead and you divide it by your budgeted volume, and that gives you your factory overhead rate. Okay, just as we've talked about before. And then you take that overhead rate and you multiply by the actual volume, and that gives you your overhead applied. Okay, so let's just fix some of these things. Let's just call it, instead of factory, let's just call it OH, just overhead. So the focus isn't just in a manufacturing setting. So let me just clean that up just a tad here. So we get our overhead applied. And if you remember from the last video, if your overhead applied is greater than your actual, then you're considered to be over-applied. If your overhead is less than your actual, I think I said that backwards before, didn't I? So if your overhead applied is greater than actual, you're over-applied. If your overhead applied is less than your actual, then you are under-applied. And if you're over-applied, that tends to be favorable. If you're under-applied, that tends to be unfavorable. And think of the U in under and the U in unfavorable. That might help you remember, that little trick there. Okay. This stuff over here to the left, that's for the accounting people. That's for the people that know their debits and their credits. So don't worry about that. But bottom line is, if you were doing some cost accounting, this information to the left here would be more appropriate. But for us, we're just going to ignore that. Okay, we're not doing any journal entries or debits or credits. So when it comes to doing this ABC, instead of coming up with just one rate, as I said before, you may want to come up with multiple rates, and that would give you a better idea of what your overhead actually is. So basically, it's like doing multiple rates. I mean, it's like doing multiple math, but you have to make sure you're using the appropriate, you know, budgeted volume, because you got to divide that into the actual budgeted overhead. So what I thought we would do is do an actual example of activity-based costing so that you've got an idea of how that works. And while I'm cleaning the F out of these, that sounds like I just swore. I didn't mean it like that. But while I'm getting rid of the letter F out of these, that's pretty funny. Okay, so we're still going to be doing the exact same thing, but we're going to come up with multiple rates. So you might have to figure out the cost of a job, you have your direct material, you have your direct labor, but then your applied is going to be based on multiple calculations, not just one. So before we had just one direct material, one direct labor, one overhead applied, and then we just added our answers together. Now we're going to have one direct material amount, one DL amount, but we might have 3, 4, 5, 7. We're going to have multiple overheads, and then we're going to add them up to come up with one total. Okay, so I'm just going to scroll down a little bit here, and here's a throwback to what we did in the previous unit. Traditional. You take your budgeted overhead and you divide that by your budgeted volume, and let's pretend in this case the budgeted volume is direct labor hours. Okay, so we're just making that assumption. Well, I'm still cleaning up the letter F out of these words. Okay, so if the budgeted overhead is $100,000 and the budgeted direct labor hours are 10,000, so $100,000 divided by 10,000 direct labor hours, we would end up with a rate, an overhead rate of $10 per direct labor hour. So let me highlight this in green. Okay, so budgeted overhead divided by budgeted volume gives you the rate. Nothing new so far. Let's assume that you actually had 500 direct labor hours in the scenario. So you would go 10 times the 500, and that would give you overhead applied of $5,000. Okay. Just imagine that the direct material cost was $3,000 and the direct labor cost was $1,000. 5 plus 3 is 8 plus 1, and you end up with 9,000. So using direct labor hours, we come up with a total cost for the job of $9,000. But what if direct labor hours isn't the appropriate base or volume? What if direct labor cost is better? What if machine hours is better? What if all three should be applied to figure out your overhead? That's what ABC does. ABC takes into account multiple impacts. So if you think of, let's say you have a receptionist that works at your job, okay? And let's say the receptionist answers the phone 4 hours of the day, and let's say 2 hours of the day they greet people, right? And let's say another 2 hours of the day they do filing. There's 3 different activities that this individual is being paid for. So it would be wrong if we just said, let's just base it on, filing hours. Well, the person only files for 2 hours. Well, let's base it on answering the phone. Well, this person only answers the phone 4 hours out of the 8. See what I'm getting at? So you're trying to figure out what is the activity level of that particular individual. From a math perspective and from a student understanding ABC, this isn't that bad. It's actually, kind of closer to easy to medium. But if you were to actually implement ABC in a real life setting, it could take over a year to actually implement it because of all the observation you have to do involving your employees, and there's a lot of analysis that goes into play to figure out what is the proper, cost pool. So let's take the exact same scenario. Here's the traditional. We already said that using the traditional way, using direct labor hours, we would come up with $5,000 as our overhead rate, or excuse me, as our overhead answer. And then add that to your material and your labor, and you come up with 9. So again, the DM and the DL are going to be the same in all of these scenarios. Okay, what's changing is your overhead. So we're trying to come up with a better value for overhead. So take a look at this little diagram that I've created here. And let's assume the budgeted overhead is $100,000, just like before. Right? Except now I want to break it up. Let's say we have a few cost pools. We've got direct labor usage, and look what I have here, such as wages of the laborers who support the direct labor, machine usage, such as electricity expense to run the machine. What if we have some machine setups? The cost of wages and technology needed to reconfigure, help if I can spell, to reconfigure production line. And what about if there's design changes, engineering salaries, and computer-assisted design software? Right? So these are examples of what direct labor usage could be, machine usage, machine setups, and design changes. So if we were doing this the traditional way, we would take this $100,000 and we would divide it by the 10,000 direct labor hours. Right? 100,000 divided by 10, we got $10 per direct labor hour. And then we would multiply it by the actual hours, which would be, figured and given to us, and we came up with 5,000. However, what if we're able to say, we budgeted out of this 100,000, 30 of it for direct labor usage, 40 of it for machine usage, 20,000 for machine setups, and 10,000 for design changes. Okay, and here's your volume. This is your, remember, budgeted volume. So here we got the 10,000 direct labor hours. What if we're budgeting for 5,000 machine hours, 100 setups, and what if we budgeted for 25 design changes? So just like I did 100 divided by 10 and got the $10 per direct labor hour, now let's get very picky and detailed. So instead of using the 100, only 30,000 should really be attributed to direct labor instead of the entire overhead budget like we were thinking about before. So 30 divided by 10 gives us $3 per direct labor hour. We were using $10 per direct labor hour if we were doing the traditional way. But using ABC, we're going to go based on activity. And we've decided that there are 4 different activities, not just one, like under the traditional way. So if we're going by activity, the direct labor, the impact on the overhead rate would be $3, not 10. Look at the machine usage, 40,000 divided by 5,000 machine hours, $8 per machine hour. 20,000 divided by 100 setups, $200 a setup. 10,000 divided by 25 gives us $400 per design change. So these are the rates. So I used $10 before and I multiplied it by 500 to come up with the 5,000. Now instead of just doing one multiplication to get my overhead, I'm going to come up with 4 multiplications to come up with my overhead. Okay, so let me show you how that's going to work. So assume that job 100, now completed, required $1,000 for direct materials used. Make that M capital. And for direct labor, right, we have 3,000 for direct labor, 500 direct labor hours, 75 machine hours, 2 setups and 2 design changes. So this is a continuation of this example here. So here's my DM 3000, my DL 1000. What's up for grabs is what are we going to come up with a value for overhead? So under the traditional way, we went 100,000 divided by 10,000 direct labor hours gave us $10 per direct labor hour. Multiplied it by 500 actual hours. I'm using those same 500 direct labor hours in this example. So we're looking at the kind of the old way versus this ABC way. Okay, so notice that this 3,000 and this 1,000 are built into my answer. That doesn't change. What is up for grabs is what is the value of the overhead. So look what I'm doing here. Here's the numbers, the rates: $3 per direct labor hour, $8 per machine hour, $200 per setup, and $400 per design changes. And where did I get the actual? That's in this yellow box here. So I'm assuming 500 direct labor hours, 75 machine hours, 2 setups, 2 design changes. So it's kind of like what we did before, but you're kind of doing 4 calculations instead of 1. So 500 times 3, 1,500. 75 times 8, 600. 2 setups times 200 a setup, 400. 2 changes times $400 per design change, 800. Add them all up and notice how much we get for overhead. So under this approach, we're coming up with $3,300, whereas when we did it before, we came up with $5,000 as the value of overhead. So let's say this is your company, and let's say you're in competition with other vendors or other suppliers, other manufacturers, and you had to go put in a bid, right? And you're saying, okay, this job's going to cost us, $9,000 to do. So let's go in and we'll bid, $11,000. Let's make $2,000 on this deal. And then you can't figure out why you're being outbid by your competition, because your competition is saying, it doesn't cost $9,000 to do this job. It's only costing $7,300 to do this job. So your competition is coming in at $9,000 or $9,300 if they're trying to make some money off of this deal, and you can't figure out why. And the reason is you were using this traditional one rate scheme that may have worked in the 50s, during World War II when, and prior to that when we were very high in direct labor and manufacturing. But since then, things have changed. A lot more automation. So it's amazing how many companies that switched to automation were still using direct labor as their base. It's kind of crazy. But anyways, so you can see that the cost of the job, $7,300 by using activity-based costing. I'm not saying that the answer is always lower than, just using the one rate. All I'm saying is that activity-based costing is more accurate. There's less peanut butter costing going around. Okay? And let's see, what did I do for this one? What if, I can't remember how I got this 1,500 here. Let me think. I may have just said, hey, what if we were just using machine hours? Hey, what if we did that? So what if we said, instead of using direct labor, let's go with machine usage, right? So if I went the old way, this 100,000, and I divided it by 5,000 machine hours, let's see what happens here. So $100,000 divided by 5,000 machine hours. So there's my budgeted overhead divided by my budgeted volume. So let's see what we get for a rate there. So $100,000 divided by 5,000. So we would get $20 per machine hour. So I'll label this if we used here. Some other audio going on here, so give me one second. There we go. Trying to do two videos at the same time. Well, the other one just finished, so it's recording and just came to life on me. Anyway, so if we used machine hours as our sole traditional volume, so $20 per machine hour, and what did we say was 75 machine hours in reality? So if we multiply this by 75 actual machine hours, let's see what we get. So 20 times it by 75, and there's that 1,500. So that's where the 1,500 came from. So let's put this in a yellow box as well. Big or in there. So if we were doing this like last unit, you know, we were, hey, what if we use direct labor hours? We came up with 5,000 as the overhead. This time we come up with 1,500 as the overhead. Okay. So if we had 1,500 in there, 1,000 plus 3,000, it's plus 1,500. Cost of the job is 5,500. Okay. So again, you know, if we were doing it using just direct labor hours, 9,000 would be our total. If we were using just machine hours, 5,500 would be our total. So it seems like 9,000 is the highest using direct labor, 5,000 is the cheapest, but we're saying 7,300 is our ABC answer, which would be a more, we'll say tends to be a more accurate way of identifying costs. Okay, so that's what activity-based costing is about. So hopefully this example was pretty understandable for you. Okay, I'll be making another video shortly on the other material that is in your Chapter 7, so stay tuned for that one as well. All right, bye-bye.